This is both for Lee Harris over at Limestone and Randy Rocky at Swan. Dawn purchased a house that needs a lot of work about 10 months ago. And now the condition of the home is getting worse. Plus, her husband and Dawn are divorcing because of the pressures around the house. They're considering just walking away or doing a short sale. It happens to be a VA loan, and she's wondering, since there's no money invested in a down payment, basically, in that house, what would the ramifications be for a foreclosure or short sale on their individual credit? So let's talk, Rennie, with you. What are the problems with doing a short sale? It seems like this is coming back into our realm again, and or a foreclosure.
Well, it affects your credit up to 10 years, depending on a short sale or a foreclosure and what loan product you're doing. It can be as little as 2 years and as much as 7 years before you can repurchase again if you have a clean bill of health, so to speak, if you don't have any lates outside of after you foreclose on the property. So obviously this sounds like this is not avoidable if they're going to go that route. So yeah, it can be very tough on your.
But let's be a little more. Let's be more specific. Lee, feel free to jump in here as well.
Sure.
So a short sale, we're looking at 2 years ding on your credit.
Well, it'll be on your credit for 10 years, but in 2 years, if you go FHA, you can, in most situations, you can finance again. You can on a purchase. On a foreclosure, I believe it's 7 years. It's been a while since I've done it.
It's been a while. Yeah.
Yeah. So I believe it's 7 years, if I'm not mistaken.
Yeah, I thought it was 5 to 7, but yeah, good.
Yes. Right.
Well, I think it's always better to, if you can, to try to sell the property versus being foreclosed on. You know, if there's any chance of a short sale, or even if there's enough there to at least just get rid of it for whatever you owe and not be foreclosed on, that's always a better choice than to just let it go to the courthouse steps.
Yeah, and let's talk about what a short sale is. So basically, and Lee, you can do this, I can do this, but you're basically coming up with a sale. Let's say the house is worth $100,000, and let's say someone is willing to offer you $80,000. Then you're asking the bank to forgive that $20,000. In other words, if you have $100,000, the mortgage is $100,000, you're asking the bank to forgive $20,000 in debt. Am I right on that, Lee?
Yes, and so they would renegotiate the amount you owe. Typically, of course, when you go to pay off your mortgage, they want you to pay the entire amount, right?
Sure.
A short sale is where you negotiate with them so that the bank doesn't have to take this property back. Banks are in the business of lending money, not in owning and selling homes. So they don't really want your house back. They'd prefer to, sometimes they have to take a loss in order to get that off of their books or get that off of their rolls. So they will sometimes, depending on the circumstances, negotiate with you for a lesser amount. And sometimes they can come back and get that difference if it's a foreclosure. So it's better to negotiate a short sale so that you don't have that extra amount hanging out there if there's a shortfall.
Yeah, the one proviso on this, be aware, and we handled a lot of helped people with short sales in 2008, 9, 10, 11, 12. But one of the things at the time, I remember President Obama had a Forgiveness Act in place that I think was carried over from President Bush. And that meant that the IRS wasn't going to come up after you for the difference in money because it was considered in some level income. Am I right, gentlemen and ladies? Yeah.
Yes.
Yeah. Right. That I do not believe that Forgiveness Act was ever renewed in the current administration. So I think you might be subject to taxes on that difference between what you owed on the mortgage and what was accepted by the bank. That difference would be considered income by the IRS. So you want to check, you want to do a lot of due diligence before you decide to go down the route. And the reason I'm even bringing this up even more, folks, is that I spoke to someone this week who called me who is going into foreclosure. The bank has set a time in November to go to the courthouse steps. And so, though the media hasn't picked up on this yet, it's becoming another part of our news cycle. I suspect we're going to see more people talking about foreclosures and short sales again as we move into this new world that we seem to be in. Even though no one wants to call it a recession, it is what it is.